you start off by streaming level 1 or level 2 order books from the exchange.
Mhm.
So, at a minimum, like what was the last trade, and ideally, what's my kind of bid and offer, and like what's the depth of that book look like. Certain exchanges will give you more than others. Level 3 is possible but fairly rare. So the first thing you're doing is just streaming all of these order books in, and then you start kind of transforming and sorting through that data and cleaning it. And this kind of second thing that you do once you've actually got the data is then you're starting to calculate the spreads. And if you're doing a triangular arbitrage, you're streaming data from a Brazilian exchange and from a European exchange, and you're looking at what's the real to euro, and the price of Bitcoin in dollars and real, and then you're just calculating like across that triangle, like is there a spread here after discounting for the fees that I'm going to have to pay and my anticipated slippage. So your typical kind of tri-op strategy is going to be doing that. Your basis trading strategy is going to be, can be simpler to implement. So, and it can be a bit more of a qualitative / modeling kind of discussion where do I think the basis is rich right now or not? Like, is it going to get richer? And ideally, when the basis is at its most rich, you want to be putting a basis trade on and waiting for that to compress. You can be doing calendar spreads, so arbitraging across time. And, you can be mixing. You then kind of, the next kind of level of complexity is you're building a portfolio that kind of combines different bits of this. So, if you're doing triangular arbitrage, you need to hold inventory across different exchanges. So on each exchange, for example, you need to hold some fiat and some Bitcoin. So now you've got kind of Bitcoin dotted around a bunch of different spot exchanges, but you're market neutral, so you need to hedge that. So you can actually pair this tri-arb position with a basis position, because you use that Bitcoin inventory as your spot long, and then you're doing some basis trading around that, where you're basis trading, but that's just shorting the future. And so now you have these two different trades inside your book that are kind of complementing each other. And like the proper arb funds that I've met with are building kind of these fairly sophisticated, sort of interconnected books where each side of the trade is actually a side of another trade, if that makes sense. What we do in Factors is quite different. We sort of think of it as a millennium for crypto, but with better culture. Like we have capital, we have connectivity to all the exchanges you would want to trade on. You tell us where you'd like to trade. We will review your strategy. We'll look at your returns. We'll talk to you. We'll understand it. We'll underwrite what it is that you do. If we think that you're, one of the top 30 traders in the world at whatever particular niche it is that you're trading, we would love to basically give you money to trade that on a managed account basis. And so we do a profit kind of share with the underlying manager every quarter. And so the Factors Fund, which is the one that I run, is a portfolio of external managers who are running different alpha-oriented strategies across the crypto space.